Hello, everyone. Zachary Jensen here, managing partner at TaxWise Financial Services, where we empower first time business buyers to maximize tax savings and grow with confidence. Today, we're going to be going over a 5-step plan for transitioning from a W 2 employee to a small business owner from a tax perspective. If you're lucky enough to be in this position, congratulations. Going from an employee to business owner is incredibly stressful. There's a lot going on there. But hopefully this video can help you out in understanding, hey, what are the sort of tax deductions I should be expecting going along. So this is targeted at someone who just bought their first business. If you're starting a business, congratulations. We'll do other videos about that. But this is just about first-time business buyers. So we're going to be going into the top 5 deductions for the small business buyer in the first year of ownership. So first one is going to be around startup and legal costs. You actually get $5,000 of startup and $5,000 of legal cost. The IRS gives us this write-off so we can get off the ground. This is also for startup as well, but more relevant as far as a business buyer goes, just because you're usually hiring consultants, you're usually getting quality of earnings reports done, you're either paying bank fees, etc. So these legal costs, like forming an entity, for example, these can deduct your taxable income right off the bat. Step 2, deduction number 2 is going to be the S Corp election. If you haven't heard about this one, you definitely need to, because the IRS essentially allows us to elect our LLC that we just created as a S Corp. And what that means is, rather than us paying 15.3% on Social Security and Medicare taxes for every dollar we make, we can run payroll, pay us a fair salary, and then have the remainder of the amount that we earn be given to us via distributions, and then we can go ahead and then not pay any self-employment tax on that. So, for example, let's say you're making $150,000 in profit and paying yourself a W-2 salary of $60,000. Only that $60,000 salary is subject to that self-employment tax. The remaining $90,000 is distributed to you, and it avoids that 15.3%, potentially saving you over $13,000 in taxes. So that's a little example for you. The third one is going to be around deducting business expenses. Now that you're a business owner, there's a lot more things we can recategorize as a business expense, whereas perhaps in the past they were not. So things like meals, company vehicles, equipment, as long as you're using these vehicles, for example, for business. Let's say you have a car or you want to buy a new car, you use it sometimes for business, sometimes for personal. You can start to write that off, the business side, of course, and then same things with the meals. Also, for home office, if you need any technology, you need a new computer, these sort of things, headphones, that sort of stuff, anything that can be tied back to a business purpose, we want to think about, how can I use this in my business to potentially get the entire or some of the write-off. And then that kind of leans over into benefit number 4, which is around company benefits. Now that you're the owner of the company, you can create the benefits. So you can enroll yourself into things like health insurance. You can enroll yourself into things like vehicle reimbursements, this sort of thing. There's a lot of kind of nuance here. So I'm being generic on purpose, just because everyone's situation is different, and you might be inheriting, as a new business owner, already put in place benefit programs. Same thing for number 5 here around retirement. You might be inheriting retirement plans. Now, there are certain things you can do where you set up a holding company, and then you can kind of get a fresh wipe, if you will, and do things like the solo 401k and that sort of thing. But it just, in general, you'll probably be inheriting a retirement plan. If you're not, it's a great time to set up that solo 401k, which allows you to put away up to $66,000 per year for the retirement tax-free. And you can also hire your spouse and do it double. So it's a very powerful retirement strategy. So I hope you guys have found this video valuable. We went over, hey, going from W-2 to small business owner, I'm going to have legal costs. I'm going to want to do this S Corp election probably. I'm going to want to take advantage of new business expenses, use my company benefits to my advantage as much as possible, and also do my retirement accounts. So hope you found this was helpful. If you did, I'd love for you to subscribe, stick around. We're doing a lot of videos around small business ownership from a tax perspective. And definitely feel free to reach out to me. Links are down below in the description if you want to reach out. Thank you so much for your time, and appreciate you watching this video. Thanks.